Well, good morning, everybody. Thank you for joining us on a Sunday evening. We can wait for a couple of minutes for others to join in and then start with the live stream. Well, good morning, everybody. Thank you for joining us on a
Yes, Siddhart, I think we can start.
Awesome. So right before we start, I would like to remind everybody that if you haven't subscribed to our YouTube channel, please do so. If you haven't, you would be missing out on some amazing content that our team is effortlessly working on. So do subscribe to our channel and do not forget to click the bell icon so that you will be notified for all our content that's coming out there, right? So I'll just share my screen and we can start the presentation.
Yes, everybody. So this is our first presentation about the PMS and how it's going. We have just went live around a month ago, and here we'll be talking about how the response for the PMS has been, how the performance has been, and our outlook for the market. And we'll try to do this much more regularly on a monthly basis, so that our investors as well people interested in the PMS are updated about us. Perfect, Siddhart. So take it forward.
Awesome. So just to take the cue from Sonam, I'll give you a structure of the live stream, right? So as Sonam was mentioning, we'll definitely talk about the performance, but right before that, we would also talk about one of our new schemes that we've launched under our PMS vertical, give you a brief about all our PMS schemes, and then talk to you about the performance. Then Sonam would step in to cover the market outlook, and we've kept a good 30-35 minutes for you guys to put in your questions and for us to address the same. Awesome. So in the past month, we've received overwhelming response from our investors, right? We have about 90 clients that we've onboarded, and we are onboarding as well within just 2 months of launch. Our live performance is about 12% in a month. We have 30 active live clients on the PMS vertical, specifically about 20 crores of AUM, and we have some amazing meetings that keep coming up with our clients, and they give us so much insights and advise us to explore new heights as well, right? So talking to you about the schemes, as of now we have 3 live schemes under our PMS vertical. The first one is Wright Factor Fund, right? And even before I start introducing all these schemes, I would like to mention that everything is very quantitatively developed, right? So coming back to the Wright Factor Fund, this is a disciplined, quantitative, factor-based approach, right? We've factorized all the factors in the universe. There are about 300 factors, but we factored them into 10 large groups, like momentum, value, growth, quality, and then we sort of pick the stocks, right, as per what the factor is suggesting. Then we do tactical fine tuning of the portfolio that helps us invest as per market conditions, right? So that is a little on the Wright Factor Fund. Moving on the Wright Factor Fund, we have a hedged version as well, right? On the hedged version, our heightened focus is on the momentum factor specifically, right? So we use the hedging part to downside the risk and to do capital protection for our clients as well, right? There is dynamic rebalancing that happens for the factor fund and the factor fund hedged, and this happens as per market regimes, right? So as in when the market changes, we sort of rebalance these portfolios, right? Bringing on, we have the newest scheme that we've launched, and this is based on a lot of investor and client demand. When we launched the Wright Alpha Prime scheme under our small case vertical, we received some crazy response, right? And we thought, why not launch the same under the PMS vertical as well? So for you guys, we have the Wright Alpha Fund under the PMS scheme. This is a very concentrated portfolio of just 10 stocks, right? Following the momentum factor specifically again, right? So we really pick those momentum stocks in which we have high conviction, and the system suggests that there is price momentum in these particular stocks, right? And because of it being a concentrated portfolio, the returns are much more accelerated than any other portfolio that you would see in the market. So that's a little about all our schemes. Now, the most interesting part of the video is to understand the performance. And I'm sure our existing investors plus potential investors would love to know how the portfolio is performing. So here's a snapshot for you for the Wright Factor Fund. The 1 month return has been about 14%, which has been outstanding. Our current AUM stands at about 10 crores, and we have 15 active investors under this particular fund, right? And as the 1 month return is 14%, we are definitely beating the index, right? So as you can see the graph over here, the pink line is the Wright Factor Fund, and you can see that it is beating the index by quite a margin. Next, we would like to cover the performance of our Hedged Factor Fund. In this particular fund, we have about 12 active investors and AUM of 10 crores, and the return has been about more than 8% in a month. Because this is a hedge strategy, we try to protect the capital of our investors, try to protect the downside. Of course, there is an additional cost attached when it comes to the hedging part, but the portfolio has given very good returns as well.
Yes, and so that this particular one started a little bit late, around a week later
Correct.
than the Factor Fund. That's why you see, there's a performance differential in that sense. Otherwise, the Right Factor Fund started like a week before this one.
Correct. Perfect. So let's talk about the performance of Wright Alpha Fund. As you know, this is one of our newest schemes that we've launched under the PMS vertical. So the returns has been in par with the hedged fund that we have. The AUM that we have is about 2 crores in this fund, which is a little less now, but as you would see in the future, this would definitely be increasing. There are about 2 active investors in the Wright Alpha Fund, and it is fair for us to understand that this is a new fund. So we've just launched it. Hence, you see just about 2 or 3 active investors right now in the fund.
Right.
Perfect. Now that we've talked about the performance of these funds and the AUM as well, right? It is important to talk about the constitute of these funds as well. So I would like to talk about the Wright Factor Fund first. As you can see on the screen, the largest allocation is towards small caps, about 66.1%. Then comes the mid cap with about 20.9%, and then the large cap with about 13%. Also, I would like to specifically mention that all our portfolios, including the factor, hedged, and alpha, are extremely well diversified, right? And as you can see on the screen again, the largest allocation in terms of sector to the Wright Factor Fund is towards the finance sector, right? And so on and so forth. So this is a very well diversified portfolio. And in case, even if a single sector is not performing well, there are other sectors that make up for the performance. Looking at the constitutes of the factor fund hedged, you would see that we've not included any large cap companies in this, right? The largest allocation is towards the small cap companies, which is about 76%, and then towards the mid cap, which is about 24%, right? And if you would look at the sector allocation, again, it is very well diversified. We have about 8% in FMCG, about 11.6% in shipbuilding, right? And about 18.3% in capital goods, non-electrical equipments, and that particular sector as well. And with the festive month kicking in, you would see that the sector of the capital good would definitely perform better because they would bear better results. Let's look at the constitutes of the Alpha Fund. As I mentioned, this is a very concentrated portfolio. We've again included only small cap and mid cap in this particular portfolio. 76% goes to small cap, 24% allocation goes to mid cap. And if you would look at the sector allocation in the Alpha Fund, we have about 21.6% allocated towards capital goods, and the largest allocation in the Alpha Fund in terms of sector is towards electrical equipment, which is about 24.4%, right? So again, this is also very well diversified. However, this is little concentrated. Hence you would see one sector having a little large sort of allocation. Perfect. So I would like Sonam to talk about the market outlook and share about what's happening in the market.
Definitely. Thanks a lot, Siddhart. And
Awesome.
next we'll move on to the market outlook. So that you
Sure.
can let me share the screen, right?
Sure.
Yeah.
Sure, Sonam. You can take it ahead. Yeah.
So I think Siddharth gave us a very good understanding of, how the performance has been. It's been quite exciting, right? And you guys see that we do have small caps in the portfolio, but that would not always be the case, right? PMS, our portfolio is totally dynamic, right? So right now, small caps are presenting, an excellent opportunity. That's why you see a lot of small caps, but that will change as the market change. And I would now like to talk to you about a few concerns that people have had about the valuation of small caps. Is it the right time to invest in small caps? And what should we be doing in terms of our allocation, right? And with the recent correction that we sort of saw in the early part of last week, has also been a worry for a few investors. So let us cover the outlook of the market in the next few slides, right? So as we all know that the rally of small caps has been quite spectacular, right? While the market has, while the Nifty has only trended 18% in the last, since March, right? The small cap index, in fact, has trended 44%, mid caps have trended 37%. And, investors are getting a little bit concerned that, has the run up been too high, or, should we sort of reduce our small cap allocation? Should we book our profits? What's happening with the small cap sector? So that is what I want to sort of cover in the next few slides and talk to you about. Why do we have a small cap allocation and how do we feel about it, right? Even in the recent month, if you see, right, if you look at from July to now, you will see that, while the Nifty index hasn't actually, it has sort of been flat. Recently, it has sort of picked up a little bit of a momentum, but small cap and mid cap have, kept the rally very, very strong, right? So people start getting worried about valuations and, will the trend continue or not? So if we go to the next slide, you will see that the small caps not only have trended a lot, but there has been a very sharp interest coming from retail investors into these companies, right? And the small cap companies, if you look at it, which small caps have done the best, right? You would see it hasn't been from the traditional small cap sectors, which is consumption. The trend has come from your investment sectors, which includes, your defense, railways, electronic manufacturing, green energy, etc. Right? So those sectors have sort of picked up, and the valuations have sort of started also picking up. But if you look at the interest that is coming into these funds, it has been extremely strong, right? People are just moving towards small and mid caps and holds. And why are they doing it? Because the current return makes them very optimistic about the future. They think that this return is going to continue, right? That's why they are coming into these funds. And we want to understand that will this return continue or not, or should we keep investing in these small and mid cap companies? So if we look at, the valuations as well as the trend that these stocks have been getting, you would see that in terms of their historical numbers, right, in terms of their historical performances, the valuations, in fact, have not, reached into any sort of bubble territory, right? It is not overvalued at all. You would see that the valuations obviously, have recovered from, recent downs, right? If you look at 2022 to 23, small caps have sort of struggled against the large cap stocks. And now they are seeing a resurgence. Obviously, there are a few worries in the market apart from everything, but this is a typical sign of a bullish market that small caps have started picking up a trend against large caps, but they haven't reached any sort of overvalued zone right now. If you look at the returns of the small caps versus large caps, again, there has been a sharp upsurge, of course, that has happened, but still it hasn't reached any historical numbers that have been too high, right? So I think there is still a little bit of scope for growth, and the trend seems to be inching strong. Obviously, there are other worries that might impact, right? The small caps could continue to do well, but there are other worries in the market that could impact the segment. So let's try to cover that as well, right? But yeah, before we do that, let's look at the valuations are increasing, but valuations will continue. Valuations can be justified if the earnings are good, right? So here we have a few of the biggest trending companies, and I'm sure some of our investors would have seen many of these companies in their portfolios as well, right? So what you would see here is that even though the price to earning ratios are increasing, the prices are increasing, but the expected earnings from some of these stocks are actually justifying those valuations, right? So if you look at the estimates that analysts across India have been giving on their earnings, you would see that many of the companies that you see in your portfolio, or you might be investing on your own, in fact, do have high earnings coming up. The predictability and the quality of earnings is improving. That's why they are justifying the numbers in terms of prices that they're getting. And that's why people expect the rally that these particular stocks have to continue going on into the future, right? So I think, the valuation worries are obviously justified, right? Because the valuations have risen sharply. But for many of these small cap companies, the earnings themselves are justifying the prices that we're getting. Obviously, not every company is justifying their earnings. There are few companies that are rallying, and people are a little bit boggled that, the earnings are not justifying the valuation that these companies are getting. And we will see corrections happening here and there. But right now, I think, as small caps start that strong rally, our focus should be on companies that in fact have strong earnings, that in fact have decent valuations, and that is what would be the best way to invest into this next period, right? When we talk about small caps. Now, the second thing that I wanted to talk to you about was on the market, on the consumer spending side, right? So what we are seeing right now in India is that with the high inflation, with the monsoons not having been optimal, and with the inflation numbers rising, right? Food inflation being a big problem for consumers, and consumption having risen a lot, and people becoming a little bit stagnant on their wages, becoming a little bit stagnant on their consumption, we are seeing consumption demand in India itself is weakening, right? Which is a little bit of a worry for a lot of investors, right? And that has been, if you look at macroeconomics in some of the few blogs and content topics that we have sort of written about in Wright Research, you would see that we talk about consumption demand and how that has been affected in the recent times. But on the other hand, the festive demand, the festive season is coming into India. The festive season is an incredible time for consumption sector, right? So if you look at this chart here, you will see that consumption in India picks up only in the last 2 quarters, right? Last 2 quarters are the biggest time for consumption in India. You would see, demand coming out for the consumer sector, for automobiles, even jobs start growing up, right? Because companies need to prepare for the festive season. They need to cater to the large set of investors, of clients for the festive season. And that's why the consumption demand also, and the hiring also peaks up when the festive season comes. You will see a revival in real estate, in auto, etc. when people start making big purchases when the festive season comes in, right? So we do expect the festive season to have a positive impact. Obviously, inflation would obviously be a very, we would have to watch out for the monsoon. If the monsoon sort of in the next few months supports the kharif crops, that would be a big thing. But on the other hand, we are seeing a pressure coming from rising crude prices also, right? So if we look at on the inflation side, obviously we all have seen that food inflation has peaked up in India, right? Tomatoes have rallied some 1800% from last year, and that has been a big worry. Recently, in the last quarter, we saw prices dip a little bit for tomatoes, but still it is way beyond its historical prices. We saw a little bit of correction in terms of inflation, and because inflation continues to be high, we will not see RBI sort of come and cut rates anytime soon, maybe. But we don't see them hiking the rates as well. On the other hand, another worry that could happen for investors is that the crude prices are inching up. You could see that in the last 1 month, crude prices have gone from the level of 80 to over 90, right? And once they reach 100, that becomes a big worry. Our central bank, as well as the US central bank, they work with certain assumption of crude prices, right? So their monetary policy, their economics is based on their expectation of crude prices. and their expectation of crude prices is not 100. They expect it to be a little bit low. And now that the crude prices are rising at a rapid pace, that could be a worry for some of the monetary policy. But still, we do not see rates being hiked at all. And maybe the rate cut could happen in a little with a little bit of delay. And with the rates being high, the crude prices could not impact the economy that much, right? So when the rates are that high, commodity prices would not spike up that much, and the crude oil worry could not be that much high. Yeah, so but on the inflation front, while food prices have been a very good prices could bring in demand, and the crude prices still cause a little bit of a worry. But yeah, if you are looking at sector allocation in this market, maybe betting on the oil and gas sector, maybe betting on the metal sector, which is supported by China, could be a good idea, right? So that would be our call on the inflation as well as the rising crude prices. Now, to conclude, our commentary on the market, let's talk about what's happening in the West, right? I think recession is one big worry. So if you talk about what are the positives and what are the negatives of the current market, I think the positives of the current market is the growth in the capital expenditure that the country is seeing, the festive season that is coming up, and the expectation of a rate cut from the US economy and the Indian economy sometime in the next, within the next 1 year, right? On the other hand, the worries, if you talk about, is the rising crude prices, the geopolitical tension in Ukraine, Russia, as well as the recession fears, right? So people in the West have been talking about recession for the last couple of years, right? They think that the growth is slowing down very rapidly in the US, but inflation is still high. But recently, if you look at the commentary coming out of JP Morgan, who does an analysis of the market, and when do they expect the growth, the policy rates to be cut? I think the commentary has changed a little bit. Recession fears have gone down in the Western region, but they are also expecting that rates would not be hiked and the U-turn could happen on the interest rate front sooner rather than later, because the growth has really suffered in the global markets. So I think when the rates get cut in the bond markets, that's a big boost for the equity markets, and that is what we are sort of very positive about, right? Even though Indian macroeconomic impacts us a lot, the global macroeconomics coming from the rate cut in the US would be a big boost for the equity markets, and that is what people are sort of preparing for, and the expectations of it are making markets go high. So that would be our analysis quickly of the what's happening in the market, and that is what we wanted to talk to you guys about. Now we will take up questions coming out from the audiences. We had floated a form, so Siddhart will first pick up questions from that form, and then we will move on to this live Q&A.
Thank you, Sonam, for taking us through the market outlook, right? That definitely gives us insights on how are we thinking, how is the market reacting, and the next course of action, right? So as you mentioned, first we'll take up the questions that were floated in the Google form, right? So Shankar Gowda is asking, I had invested about 50 lakhs a year back in another PMS and it has grown to 70 lakhs. Is it a good time to book profits?
See, I mean, we are not aware about the other PMS that you guys you invest into. If you think that those guys are doing well for you, right? So you should stay invested in it for a long term, right? So in our PMS slides that we show, I think PMS is an excellent way to invest if you are looking at it for a long term, right? So maybe if you invested in whichever instrument you are investing for the next 2 to 3 more years, you would see an incremental benefit coming out from that investment, right? So that would be our call. And, you could explore the Wright PMS as well. But if you're happy with your current PMS, please do continue in it for a long term.
Awesome. So we have a very interesting question from Sid, right? He is saying that whenever we launch a new scheme or new fund, and any investor invests on the same day, it's fine, right? But if any investor chooses to invest in the running of the fund, as in a midway position, there is a chance that the rebalance might be negative for the first time, right? So what is your take on that, and what is your suggestion how should investor think about investing in a fund that has been running in the midway?
Right. So, so there are two ways to look about it. When you're talking about small case, the rebalance comes on a particular day. Right. So you can expect, like, if you're betting on investing into alpha, the rebalance comes on the first Monday, right? On every Monday, sort of, right? So if you're planning to invest there, do it on a Monday, so you will not see a rebalance in the next 5 days. If you're investing into a PMS, we will handle it such that we are not rebalancing your portfolio. If a rebalance is due in the next couple of days, we will give you allocation in the latest allocation only, right? So we will not invest today and rebalance it 2 days later, because this is under our control, right? We see your capital, we see the cost, and we see everything in front of our screen, so we can optimize how to deploy the capital when we are doing it in the PMS.
Awesome. Thank you for that. So we have a question from Shekhar. He was pointing out to the constitutes in the portfolio when it comes to small, mid, and large cap. I think we've covered that, Shekhar, in the slide. But he has another interesting question. He's saying that he read an article that was suggesting that some of the recent or renowned PMS managers delivered negative or thin returns in the last year. So what is your perspective on this, Sonam?
See, at the end of the day, every PMS is not the same, right? PMSs have different strategies, different outlooks, and different philosophy going behind it. At the end, it's just an instrument, right, for people to take out their investment philosophy and their strategies out. So, somebody who might not have performed that well might be going with a very, very different strategy from ours. They might be investing into value stocks, or, undervalued stocks, or, which might not have performed, or, they might be very highly diversified, or they might be betting on very large companies instead of, growth companies. That could be a differential. So I think every PMS is different. We, like we have told in the beginning itself, that we follow a particular philosophy that we really believe in, which includes the component of momentum, which includes a component of risk management, which gives us a lot of confidence of doing well in trending markets, as well as when we see any sorts of volatility, right? So I think every PMS is different, and what we want to do with Wright Research is that we've done so well for our clients in the last 4 years, right? So in the small case structure, and we want to do the same in the PMS, and that is what our intention is, right? And that is what we want to do.
Awesome. Another interesting question from Shekhar is that with the Chandrayaan and Aditya launches, right? Do we see any stocks from these sectors in the PMS schemes?
No, definitely. So we already have had a few stocks that are there from the defense segment, that are there from the electronic manufacturing segment. The space tech segment, doesn't have a very, very wide number of stocks that are listed in the markets. But obviously, we have, as you can see, we have had allocation to all the high growth segments, and we will add allocation to any stock that is specific to the space tech segment as well as the market continues, right?
Perfect. I think that is pretty fair, right? We have a question from Dhawal. He wants to know that, just give me a moment. Right. He wants to know that given the rally in the small cap and mid cap indexes, right, the risk reward ratio sort of seems unfavorable right now. So what advice would you give to clients who are joining recently or joining now for the PMS schemes?
Right. So I think we sort of talked about it a little bit, like, right, that there is obviously a worry of overvaluation from a lot of investors. They think that, small and mid caps have rallied too much, and should we invest or not, right? But I think, like we said, that, some small caps, in fact, are justifying their valuations. The numbers in terms of earning predictability, how those companies are growing, are justifying the prices that they're getting. And our focus is to only allocate to those stocks, right? So if you talk about us on the PMS side, on how we've been managing, and I'll be very candid about it. See, when we started around a month back, we were deploying the whole capital for the clients on day one. We were very confident about how the rally has been. But last week, after that correction that happened sharply in the small cap index, we've been a little bit conservative. We would initially deploy 70% of the capital. And what we are seeing is, let us watch the market. Let us see if we need to shift any allocation, and then shift, deploy the whole 100%, but for few clients who are very confident, we have deployed the 100% on day one itself. And I think we are very, very closely watching if any stock or stock in our portfolio we think has reached into that zone where it has become overvalued and it is time to exit, then you can rest assured that we would be taking that call, and that would be our advice to investors. But right now, as you can see, even in the last week, the PMS has given good returns, and we are working with the stocks that the strategy talks about. Right?
Right. Perfect. So Dhaval has two more questions, which I'll take up. He's asking about, did we add any support from discount brokers yet? Yes, we've signed up with Zerodha. By next week, you should see them live on our platform. And definitely the brokerage would be reduced from our current broker, right? So that is another benefit to our PMS clients. The other question that Dhaval you have is you're asking if we can sell stocks and hold cash when the market falls, right? So Sonam, do you want to take that up?
Yes, definitely. See, like we have talked about that, risk management is a very, very important part of what we do with Wright Research, right? So there are multiple layers of it. First is that it's a very highly diversified portfolio. So like even for Alpha that Siddhart showed you, you would see that those 10 stocks all of them come from very diverse set of industries, right? So huge focus on diversification so that even if one sector is hit, other stocks will come and support it, right? So that the first layer. Second layer is asset allocation. So in our factor fund, you would see that whenever we see risk, gold and bond and all those type of things will start coming in to reduce your risk, right? On our factor fund hedged, even on our alpha side, we'll be deploying put options and trying to hedge the exposure of these strategies when we see a big risk in the market, right? So that's the second layer. And then obviously the deallocation policy. So along with everything that goes on in the market that we have analyzed with years and years of data, markets will continue to be unpredictable, right? So after a certain amount of correction, we believe that we have to start the deallocation policy. But we really believe in the equity market, so we will not go totally into cash. We will do it in a systematic fashion. So if we see a 5% correction, we will reduce our allocation to the strategy by 5%, and we keep on doing it with the correction that goes on. It's a dynamic thing. It's not just 5%. It has a dynamic element to it as well. But the allocation policy, in fact, is a big part of the strategy. And you would have seen, if you have looked at our small cases, we have done deallocation in 2020, which has worked really well for the strategy. Again, in the last year, we've seen around 10-15% deallocation happening at some times in the market, right? But not all the time. So that would be, obviously, we do have deallocation as a strong part of the strategy.
Right, perfect. So we are seeing a lot of questions from investors, right? So now they want to understand that if we can divide the PMS amount or allocate our funds to the various schemes that we have, and if we do that, how does that affect the returns?
Definitely. So let me talk about that a little bit, right? So see, we have four main schemes in the PMS now, right? One is our factor fund, which has low risk and good returns. Then we have factor fund hedge, which focuses more on the momentum factor compared to the factor fund, right? So that could give you accelerated returns, but we are hedging it to reduce the risk, right? So the hedged one would have, on the equity side would have slightly higher risk compared to the factor fund. The third one is the alpha, which is our high risk and high return. So that one you can expect the highest amount of risk, and when the markets are good, possibly the highest amount of returns, right? And then we've also launched a debt scheme, right, which is nothing but debt funds. And the idea there is to just give you low risk, right? So let's say an investor comes to us and says, I want slightly conservative, right? So what we can do is within the 50 lakh that you choose to invest, we can give you 80% allocation to factor fund, 20% to debt, or depending on your profile, we can give you, let's say, 60% allocation to factor fund and 40% to debt. On the other hand, if you're a high risk investor, you say, give me the highest amount of risk that you can, then I can give you more allocation to alpha and less to factor. And we can do different combinations of these funds catering to your risk profile. And if you guys sort of want analysis of how the return profile will look at with different combination of these funds, we'll be very happy to publish something, maybe Excel sheet or something on the website which you can play around with, and try to find out the best combination for yourself, right? So I think that could be something that we could do.
Right. So I hope Goprem and Abhijit, your questions have been answered around this, right? Next, we have a question from Mr. Hari. He wants to understand the difference between the factor fund and the alpha fund, right? Also, Sonam, if you could tell the difference between the hedged and the factor fund, right? That would also help a lot of investors get answer to their queries. Yeah.
So the factor fund is only long only. What that means is we only buy stocks or sometimes ETFs, right? We don't go short in any ways, right? And it is a combination of different factors. So, obviously momentum is a very important factor that will have allocation for a majority of the time, but it also includes other factors like value, quality, growth, etc., that will come in when the market situation changes, right? So that's one category. Here we have a component of asset allocation will bring gold and bond when we see that there is risk in the market. The second one is the factor fund hedge. This is more momentum, right? Here the importance is given more to the momentum factor. So more similar to the right momentum allocation in some sense. And the hedged one also has a hedge, right? So when we see risk in the market, we hedge it, buying put options, right? So put options, their value will increase when the market crashes, right? So whenever there's a downside risk, right factor fund hedge will buy put options to hedge that risk, right? So those are the two options. So factor fund hedge is slightly higher in terms of risk compared to factor fund because of high allocation to momentum, but then we are hedging it with the put options. The third one is alpha. Alpha is more similar to factor fund hedge, but the difference here is that it is much more concentrated, right? So I think me and Siddhart published a video on concentration of portfolios, right? Whenever there is, if you have 100 stocks in your portfolio, even if one stock rises, your overall portfolio will not have that impact, right? But if you have lesser number of stocks in your portfolio, if you have only 10 stocks in your portfolio, you will see that if one stock rallies a lot, your overall portfolio sees that big impact, right? So the alpha fund, what it does is it bets on the momentum stocks that we see are having the highest momentum, that have a lot of conviction as per the strategy, and we keep that number small, right? So if the number of stocks in the portfolio is low, you will see a high risk as well as high return coming into that strategy. So that is a third category. And then we have the debt allocation, right? Like we said, which is just debt to reduce anybody who wants a lower risk, right? So these are the four funds, and I think I explained it well. Or is there any other questions about it?
No, I think that's pretty much it, right? And you've explained it in much detail, right? However, just to sum it all up, we have a specific question from a lot of investors. So I'm just summing up the question for you, right? They want to understand on the hedged fund, right? How does it work? How does pledging work? Do we do pledging? How does the margin work? Is it always a hedge portfolio? And what are the costs of hedging in that case as well?
No, that's an excellent question, right? So see, on the hedged side, what we do is we are buying put options, right? So if you go and check, open your Zerodha account, any broking account that you use, you would see that whenever you're going to buy a put option, the amount of money that you need to put in is quite small, right? So if you want to get a allocation into most recent put options, you would see that the price would be around 50, 60, 80, along with the 50, a lot size of 50, right? So that makes the buying price to be quite low, even though with that you're getting a big exposure, right? So we don't need to pledge up any amount of money. We do keep some amount of cash out for our clients that we can utilize to hedge the portfolio, and we don't need to pledge anything. Pledging is, I don't think it is allowed within the PMS structure. We keep that cash aside that we would use for the hedging of the strategies.
Right. Awesome. Sonam, there's a question from Santosh. He wants to understand that for the Alpha Fund, right? For Alpha Prime, rather on the small case side, we rebalance it weekly, right? So what happens on the PMS side? What happens? How does the rebalance happen there?
No, the same thing happens on the PMS side also. We have we try to rebalance it on a weekly basis. We think that it has to be much more actively managed compared to other momentum strategies because the diversification is low, right? So yeah, we do that, and we have done a rebalance on the alpha side last week, right?
Got it. Perfect. So I hope that answers your question. Santosh, we have a question from Bern. He's asking that um, for all the PMS schemes that we have, right? Is it customized as per each client? Is it a standard one, or can clients customize these schemes as per their goals as well?
Right. So I think that has been a learning process for us, Siddhart, that,
Right.
we were trying to, within the scheme, we were trying to do customizations, but I think that's not ideal. We are trying to maintain similar allocation for all clients within a scheme. And, if a client has a specific risk profile, then we can give him a combination of funds, right? So within that 50 lakh, you can opt for a combination of schemes, right? So let's say you're a low risk customer, you can say, give me 30% debt and 70% equities, or factor fund, or if you're a high risk investor, you can say, give me 30% allocation to alpha and 70% to factor fund. And those type of customization we're very happy to do. If you want to do an STP, that even though you've started with 50, you want us to make sure that we're not deploying all of it in one go. We are doing it in a systematic fashion. We can customize that for you. If you, let's say, have transferred your stocks into the PMS, right, instead of cash, and you ask us, sell them based on my taxation, right? Whichever stock has gone through long-term capital gain tax, uh, sell those, don't sell the short-term, wait for that, and all those customization we're doing. But within the scheme, we're trying to keep the allocation similar for everybody.
Got it. Awesome. One of our existing clients, Mr. Ramesh, he's asking, will we do any periodic calls with our existing PMS clients only?
Existing clients only, definitely. So this call was also intended, we did not send out the stream link to everybody. It was mostly to people who have invested and people who have sort of shown interest. And I think as our pool of investors goes larger and larger, we would keep exclusive calls only for those investors.
Right. Right. I think, yes, definitely we'll be doing that, and we'll be very active on sharing updates, right, from our side, of course. And alternatively, all our existing investors can easily sort of reach out to us. So that
Right. And
won't
I
be a
think,
problem.
Siddharth, you've been in touch with most of our investors. I've been in touch with many of them. And I
Right.
hope people are happy with our engagement with them. And, if you have any feedback on that side, we're very happy to receive it. We want to, keep our connection with our initial set of clients very strong. And we
Right.
want to make sure that, we are building something with immense amount of trust, right?
Perfect. So again, to sum up a particular question from many investors, right? They want to understand that if somebody is already subscribed or invested in the Alpha Prime small case, why should they choose the Wright Alpha PMS, right? What should be the reason? And Muzamil also wants to understand what is the difference apart from just the minimum investment amount, right? Because in the case of PMS, it's 50 lakhs, and for our small case alpha, it's hovering around 35 to 40,000 right now.
Right. So first thing that I would like to tell everybody that we keep on repeating is that small case and PMS both are extremely important for us. We put in all our effort in both of these structures, and both of them are excellent products for you to invest in, right? The PMS is a different structure from a small case because we also get to manage the execution for you, right? So how the stocks are traded, when they are traded, and how optimally we can trade it, that also is something that we manage for you, and that is what we bring in with the PMS, right? PMS also, we can do much more active risk management, take much more active calls. So let's say a risk or an event happens in the market, we can execute then and there in the PMS, whereas with small case we sort of have to wait for the next day. So those type of things are here. With small case, we follow a periodic, we like I say, only on a Monday or only on the first of the month. But here in the PMS, we can take calls as needed, right? So those are the differences that I would say, are there from our side. From the structure side, obviously PMS has 50 lakh plus, and some sort of differences, from the small case structure, which are all, which might be obvious for the clients. So I think that is the difference. And I would not say that if you love the small case that we are offering, you don't really need to switch to a PMS. Only if you think that that might be a structure that might be much more suitable for you. Once you invest into a PMS, you're not going to exit it, right, soon enough. And I think so you can let your money stay and be sticky with the strategy that we are following, and reap in the long-term benefits, right? So I think that would be our analysis on this.
Perfect. We have a question from our existing investor, Mr. Yogesh. He wants to understand that he has already invested in our PMS, right? So can he shift 25% of his allocation to another scheme, say Alpha in this case? Is that
Definitely.
possible for existing investors? For new investors, you said it is, but
Yeah,
for
yeah,
existing ones,
yes.
yeah.
So it is definitely possible. What we would do is maybe, ask you for a written sort of communication from your side just for audit purposes, right? We have to show in the audit that why did we shift your allocation? Why did we do this? So, we would take some side of written communication from your side, but it is definitely possible and we can have a discussion, right? Does it make sense to shift right now? What is the overlap between these two schemes, and how this can be done? We can have a discussion, and we'll be very happy to have a call with you, Yogesh, and then do it. Yeah.
Perfect, right? So there's a question from Renault. I think we've talked a lot about the schemes, the constitutes, and the market outlook and everything, right? But we haven't covered on the costs of the PMS. And Renault has a question on that, right? So Sonam, it'll be awesome if you could explain the three structures that we have in terms of cost for the PMS briefly.
Definitely. Yeah. So see, the PMS that we are offering, what we are trying to do is do really good for our clients in terms of the fee structure, right? So we don't want to overcharge you for anything. I know that people are coming from in this new market of discount brokers and advisory services. People don't want to overpay for a PMS. So you would find that the Wright PMS is one of the most conservatively priced PMS in the market, right? We offer three types of structures, right? One is just a flat fee, which we keep at 1%, and which is something that you would find, even AUM based small cases, I think, charge higher than that, right? So I think this is a very conservative number that we are putting in here. But people who want their fee to be performance linked, right? If you only want to pay us when we make money, and incentivize that, I think we have a few performance based structures also, where what we are doing is that you don't pay us a flat fee. There is only a performance linked fee. What that means is only if the PMS is doing better than a certain threshold, right? Only then you will pay us a fee, which will be in terms of performance sharing. So in the second structure, 10% is the hurdle. So only if the PMS is giving you more than 10% in a year, you will pay us a fee, and that would be linked to the performance, right? So if we do 20%, so on a differential between 10 and 20, you will be sharing the performance fee with us, and the performance share is also 10%. In the third structure, BSE 500 is the benchmark, right? So there's a benchmark. Only if we beat that benchmark, you are going to pay us the fee, and that will only be a percentage of the outperformance, right? So you're only paying us when we are outperforming the benchmark. If you're not, then you're not paying us anything, right? So I think, very interesting fee structure, right? I don't think
Right.
nobody prices their PMS that competitively in the market. And obviously, as many of our investors know, that we have tried to do even better, offer discounts to our initial set of customers. Siddhart said that we are at 90 right now. Till 100, we'll be offering discounts, and we'll be working with our initial set of customers to make sure that they have a good experience. Right?
Right. Awesome. Sonam, just to add on the cost parts, right? There's a question, right? Mr. Kirit Joshi is asking, do we follow the watermarking for all types of fee structures, or how does that work?
Yeah, definitely. We do have a high watermark principle. For the performance linked structures, for the fixed fee, there is no watermark needed. But for the other two performance linked structures, we do have a high watermark. What that means is only if we are our performance will be compared to the highest point. So let's say the PMS goes from 50 to 55 in 1 year, 55 to, let's say, 45 in the next year, right? And then 45 to 60 in the third year, right? So the third year performance will be not from 45 to 60, it will be 55 to 60. So from your highest point to the latest number, right? And that is where the performance will be charged. So the performance will always be charged based on the highest point that your PMS has reached, right? That we do follow in both our performance and structures.
Right. Awesome. So another question from our existing investor, Mr. Shekhar Ganeshan, he wants to understand that allocation in the factor fund hedged, right, seems to be more aggressive than the factor fund, as there is no large cap, right? So what would be your take on this?
In the factor fund hedge, yeah, it is a little bit more aggressive. It doesn't have large caps like Shekhar said. But yeah, I think those are, like I said, there's a little bit of more tilt toward momentum, right? And we all know that small and mid caps have had the highest momentum in the last few months, and that is where it is betting on.
Correct.
But yes, we are sort of closely watching and seeing how the scenario changes, right? So
Right.
you can, like I keep on repeating that we do have a strong focus on risk management, and we will be talking to you also, right? So on an individual level, if you have any concerns or anything, please do reach out to us, and we'll be very
Right.
happy to address that.
And Shekhar, to answer your follow-up question, yes, you can distribute your 50 lakh investment across the various schemes. So you can get in touch with us and we'll be happy to advise you on that, right? Uh, we have a very interesting question from Sagar. So, from Sagar Sonam. He wants to understand that given the team is small and a lot would be centric around 2 to 3 members, right? How do we solve for team continuity risk in this case?
I mean, see, we do have like Wright Research right now has around 10, 12 people in our team. And we do have, while you must have talked to me and Siddhart mostly, but we do have a lot of support coming in from, different teams that we work with. So our onboarding piece is handled by, somebody who we have outsourced it with, who is doing an excellent job. We are about to get digital onboarding live for the PMS, right? So I think after a few weeks, there will be no paperwork for Indian domestic clients. It will all be online, right? So that solves a lot on that piece. We have amazing support coming from the Edelweiss team who's been helping us on all the operational side of the PMS, right? And we are also, trying to bring in more people on the PMS side to help scale the team, right? So as the business grows, as we start getting some return from this field of business that we started, we would be also expanding the team to make the lives of the clients and ours also a
Right.
little bit easier. Right?
Right. Awesome, Sunam. Thank you for answering that. Right. We have two questions from Aditya and Raj. Right. So they want to understand the structure of the PMS. Right. So say Raj was asking that in small case we mandatorily have to place market orders. Right. So
Hmm.
how much can one save per annum by investing in PMS where we can optimize the cost while buying and selling the stocks? And
Right.
also, how does it work on a pool level? Right. How do
Yeah.
the transactions work? Yeah.
Yes. So see, when you send a market order and that is only valid. So we have to talk about large amount. Right? If you're buying 1 lakh worth of stock, then, the execution cost will not be that high for you. But let's say you're buying a large amount, right, which is a 50 lakh, and you send out a market order, while Zerodha is saying that you are getting a zero brokerage, you in fact are paying, I think, roughly more than 10 basis point to the market, right? Because that is the cost of execution, right? You end up getting a bad price from the market, right? So
Mhm.
so, so the PMS would bridge that, right? The execution cost will go down because we are slicing it across a long time, right? So we typically slice our orders within 30 minutes, and we're trying to get the best price for the clients. Uh, on the other hand, the broking cost also, like Siddharth said, we are about to go live with Zerodha, which will cut down our trading charges by a big chunk, right? So that is also about to go live. Obviously, the client doesn't need to do anything on the broking side. Broking is only on the PMS level, and we're handling it. That doesn't impact anybody's onboarding it.
Right. Perfect. So, guys, just to keep everything in the interest of times, we'll just be taking, few more questions and then we'll need to wrap it up. Alternatively, you guys can always reach out to us for more specific questions that you might have, and we'll be happy to answer them for you, right? Sonam, Ajay is asking, is there flexibility to change the fee structure, which is fixed versus variable on a periodic basis?
See, we can have a discussion, and we can do that revision, right? We just have to make sure that different teams, which is the fund accounting custodian and us, are in line, and we can do that after a discussion with you.
Right. Awesome. Sonam, also I see some feedback on the app, right? On our and on the iOS app bit as well, right? So Shivam and Jitesh are asking that, could you give us some updates on the app where the app is not stable right now and what is the progress on that?
Yes, so I think that's a great question at this point in time. So, like we announced on social media that we've hired a CTO recently full time, right? And they've been working on overhauling the app, right? So, what our app does right now is to be a little bit technical, it is like a web view, right? So, it showcases the pages that there are on the website in the app, right? But right now, our team has been working on creating a totally native or totally, app-based interface. And, we're just testing it. We've reached the final stages, and I hope for somewhere in the next week, we'll launch that new version of the app for our clients, and that will have everything in the native setup, which will make it much more seamless.
Right. Awesome. One question from Archana, Sonam. She's asking if I opt both for, say, factor and alpha, right? Which is she invests 75% in the factor fund, 25% in alpha. In this case, will she have access? Will she have all these stocks in her portfolios from both the strategies, or how would that work?
Yeah, definitely. That's what would happen, right? We would give you exact, as per your allocation, we'll give you stocks for both the strategies.
Got it. Got it. Awesome. So apart from all the questions, right, I would also like to acknowledge some really good comments from our existing clients, right? So GoPrem has commented that he loves our momentum style of investing, and he's very bullish on Right Research, right, and our growth. So thank you for that, GoPrem. Anwar, one of our existing investors from Jamnagar, Gujarat, Sonam, is saying that he's seen a 12% rise in his PMS portfolio against a 3% rise in Nifty 500, right? So this is a genuine feedback for him, and he's very happy as well, right? Would you like to acknowledge these
Happy for
comments?
that. Yeah, and he's a fellow engineer from Jamnagar, and
Right,
so happy that we are doing well for him.
right. Awesome. There's one question from Raj Sonam. He wants to understand, for the factor fund, will we have a concentrated portfolio?
For factor fund, we are not doing concentrated. We are doing concentrated only for the alpha side. And I think that's the best sort of a way to do concentration, right? But yeah, we can explore if we find something interesting, right? If we find something that could be better on that side, then we can definitely try to look at it.
Awesome. So just last three questions and then we'll wrap this up, right? So our existing clients, Mr. Ramesh and Naresh, are asking that how does it work with moving to the new broker, right? Say, for example, a client has already invested with us and Edelweiss is our current broker. And if we get onboarded with Zerodha, how does the movement happen or this shift happen, right?
So there is nothing that has to be done, right? What would happen is ki any trades in your account or anybody's account can now be done through Zerodha, right? Obviously, previously we've done it with Edelweiss, but going forward, we can do any of the trades with Zerodha. We can add as many brokers as we want, right? So if you look at some of the older PMS, they might have 10, 15 brokers, and they tend to distribute their orders within different brokers also, right? So we will get Zerodha on board, which will lower the cost, and we'll also explore somebody if they're giving us even lower cost, then why not add them, right? Depending on how good the infrastructure they have. And so you don't need to do anything. We can just any further trading that happens in your account can be done by the new broker.
Awesome. So Sonam, we have many questions from investors who want to understand how can they proceed, right? What is the next steps if they've decided to invest in our PMS, right? So if you could talk around for a minute about that, that would be awesome.
Yeah, so let me also share my screen for that, right? Make this a little bit simple. When you go to our website, you will see PMS sort of floating around here. You would see PMS in the start investing thing. So you can just go to the PMS page, and either on the PMS page or, after you have, looked at any of our PMSs, you will find there's a button that says start now, right? When you click on that button, what it will do is it will give you a form where you can put in your name, email, and phone number and submit it. And we will get that contact information. Our team will reach out to you. You will get an email from us, which will help, which will give you a link where you can set a call with the investment team, right? So if you want any sort of guidance, the call will be set based on that link. You can choose a particular time when we want to talk. If you have given us our phone number and have not booked the call with us, then somebody from our team will call you and help you set a time to talk to the investment team. What we are also doing here is, I think in the next week, we'll have a dedicated form here for people, who are convinced, who don't need to talk to us and they just need to start the onboarding. So we'll have a form here where you can fill in all your details and, we'll get that details and we'll start the onboarding process right from the start, right? So I think this is the way to reach out to us. Otherwise, if if you're interested, we have various channels through which you can reach out to us, right? We have email, phone number, different sort of social media, anywhere you want to reach out to us, we'll be very happy to talk to you.
Right. Right. Awesome. Perfect. Thank you for sharing that, Sonam. So as Sonam said, there are various ways to reach out to us, and once you do that, we and you're onboarded with us, we will tell our operations team to send you an email with requesting some documents from your side, some KYC basic documents, and that's how the process sort of kickstarts, right? So it's pretty much mainstream and quite simple, right? Yes, Sonam. Do we also run an AIF? Mehul is asking.
No, not right now. AIF is a totally different structure, and we might explore it in the future. We might explore AIFs in the gift city in the future. We are thinking about a lot of things, but
Right.
obviously it is a process and it's a long term paperwork and a lot of legal things have to go on. We have to
Right.
restructure the team and this and that. So we'll be
Right.
thinking about that as we
Right.
progress.
Okay. I wanted to end this, but two more interesting questions have come up, right? So Sonam will quickly address that with your consent, and
Yeah,
then
yeah.
sort of go to the conclusion, right? So Akashdeep is asking, have you started hedging in the factor fund yet?
No, not really, Akashdeep, and not really. We haven't got the trigger to hedge.
Mhm.
Uh, so it is not hedged right now.
Got it. And one last question, Kaushik is asking, what happens with the dividend amount in PMS?
Yes. So the dividend, what happens is any dividend that comes to the custodian account, right? The custodian has a bank account where the dividend comes and is parked. You will be able to see that you receive that dividend in your fund accounting dashboard. And then we have a choice to either deploy that dividend in terms in the fund or to send it back to you. So depending on what you want, we can either reinvest the dividend or send it back to you. So that has to be a discussion between us.
Got it. Uh, awesome. So I think we can, conclude, Sonam. But there is just one last question from Mr. Shekhar, who's an existing investor. He's asking, will there be an exclusive app for PMS, for Wright's PMS?
Yes. So see, on our new version of the app that I said, we are going to add PMS as a vertical, and you'll have everything that the website has on the PMS side as well. On the on the dashboard that you guys see, and if that can be made live and that can be done on our website, our team is working on it. Right, we have some very excited techies in our team who are exploring ways how they can give better solutions on the PMS side, right? So a dashboard that can be tracked live, or something that is provided by us. We are sort of exploring those things as well,
Mhm.
and whenever we launch, we will do that on the app as well, right?
Awesome. Yes. So, just to be very specific to all the guys who are asking questions on, the various formats of should I choose small case, mutual fund, PMS, we'll be coming up with some content on that. So you can, get your queries resolved by reading that content. Alternatively, reach out to us. Yes, that would be all. I think we've tried to answer almost all the questions that were raised during the call and before the call as well. Yes. So Sonam, over to you.
No, I think this was an excellent session, and we will keep on doing this regularly. We already talk to a lot of our investors on a regular basis, but having everybody together and being able to address their concerns, I think, is an excellent thing, and we have to do it much more regularly. Obviously, we'll do it on a monthly basis and as needed, as whenever we see an opportunity to do it. Thanks a lot to everybody for attending. It was amazing. It's always amazing to see the interest that people have been showing. Please reach out to us if anybody else is interested in the PMS. If anybody wants to come and visit us, if anybody of our existing clients would, give us the pleasure of coming and meeting us, that would be great. And yeah, we'll conclude by wishing you guys a very good Sunday and I hope you have a very good week.
Right. Thank you for that, Sonam. And in case we've not answered any of your questions,
All right. Perfect. So I think this is pretty much it from our side.